Hi friends, this is Santosh. Welcome back to my channel. Uh, Last time we had done the introduction to the markets. I hope you liked the video. Today we shall go on with the market structure. Okay. Now, market structure, as we will discuss. Okay, it is a fight between bulls and bears. Okay, bulls are those persons who are buyers, whose more whose intention is to rise the prices, whose intention is to buy. What they do is that whatever price they get, or if they get a suitable price which they like, they go on buying. And the bears, they wait for the suitable price to sell. When the bulls are active, we say the market is in a bull run. Why? Every candlesticks is going up. All the green candlesticks suggest bulls, and the red candlesticks suggest that bear. And if the red candlesticks are more in the chart, we call that the chart is bearish or the market is bearish. What does it signify? Now, when there are red color candlesticks, then we understand that the bears are in control, that the prices of the stocks or commodities or anything which you are trading is going down. Okay. Now, this is a picture you see when the bulls are in control. It is showing that the green color arrow is going up. That means the prices are going up. Let me take you to the chart to show it more clearly. Okay, you will understand better. Yeah, you can see this. This is the chart of Nifty. Nifty means it is an index chart consisting of the values of the top 50 companies of India. Now look at this. Straight as you can mark this chart, okay, in this chart, you can very well see that the market is going up. Okay, see this. Okay, this is the direction of the market. Okay, again it is coming down, now it is going up. I can change the color to green, okay, so that you can see it more clearly. So this is a bull market, okay, or the bulls are in control. Now again, if we go a little back, now look at this phase. Here you can say that the bears are in control. Okay. Now that is why all the candles that you see are red in color. Most of the candles are red in color. Okay. Okay. This is the direction. This is another example. Now you can see the bears are in control. I hope you get the meaning of what I want to tell you. Here the bears are in control. Now look at the candlesticks. You can see the major candlesticks are in red. Okay. This shows that the bears are in control. Now coming back. Now what is this charting? In this charting, what we do is that we use candlesticks and the bar charts on the charts to follow what is the trend. And using candlesticks is much better because the colors of the candles make it easier to read the data. Green candles means that the market is going up very easily, you can see, and the red candles means that the market is down, market is coming down, or the prices of your stock is coming down. Now, what does charting do? This charts helps us in identifying the trend, whether the market is in uptrend or the market is in downtrend. Okay, then it helps us to know the market structure. How is the market moving? Whether it is going in a straight line, that usually never happens. Market always follow a fixed market price action. Okay, that we'll discuss in further sessions. Now, what else this charting does? It helps us in identifying the price action, how the price moves, and also it helps us in knowing the support and resistance. Now, this suppose you manage to stay in the market for a long while, support and resistance is the only thing that you will use. You will, because that is the base of everything, every strategy, everything. If you know support and resistance very well, then you can stay very long in the market, you can earn a hell of a lot. Okay. Next next what are the type of scales we use? Okay, we use a linear chart. Okay, the time is on the x axis. Okay, and the prices are in the y axis. I can take you here. Now you can see very well. Now look here, you have the price on the right side. You can see my cursor moving. Okay, and in the lower side you can see the time. Okay, the date is written over here. Now if I convert this chart to 5 minutes charts, then you can see the time is written over here. Okay, now you can see the time it is written, 14:30, 15, then 21st is coming, 10 o'clock, 10:30, 11 o'clock. Okay, so and here are the prices. Since this is the bank nifty index, you are seeing, suppose I convert it into a stock chart, any company you say, suppose Bajaj Finance. Okay, or Reliance say. Now you can see it clearly that the prices is showing. Okay, this is prices moving like 2334 to 2348. Okay, during the day, what has happened is that, giving you a snapshot, on the 21st the price has started at 2354, then it has come down to 2336.10, then again it has reached a high of 2360. That is how price moves. And this zigzag motion, what you are seeing is that this is called price action. Price cannot move in a straight line, it has to come down, then go up, then come down, then go up. Okay, this is called price action. It follows a theory called Dow theory. We'll discuss it later. Okay, now coming back. Now, what are the time frames? Now, look in this chart, as you have seen here, I have changed the time frame. Look in the upper side, you can see 1 minute, 3 minutes, 5 minute, 15 minute, 30 minute, 1 hour, 1 day, weekly, monthly. Okay, these are the time frames we use, and this is a trading view chart. This is, excuse me, this is a very good platform to analyze the chart. Other platform are ZERODHA charts is very good, and DHAN chart. DHAN is also a broker, a very nice broker. You can find the link in my channel. Okay, in the description. DHAN is totally free. You can, if you want, you can open an account. ZERODHA takes some 300 rupees, but still good charts. Trading view, this is the free version. You can just install in your phone, or in the system it is free. Okay, so this is very good platform to analyze the chart. Now, so this is called price action, the way the price moves. Okay, now coming back here. So this is the time frame. The trading time frame is TTF. We called it the primary time frame in focus, and higher time frame provides a bigger picture. Now this is very important. You should realize. Now look here. The smaller the time frame, the difficult it is to analyze. Actually, if I take it to the daily time frame, now what I can analyze is that, Reliance chart. Okay, this every candle symbolizes 1 day, or it refers to 1 day. What I can judge from it is that the price has come down again, has gone up a little, that is called a retracement, then again come down, then it has gone up a little bit, which is a slight pullback, then come down, then again a pullback, then again come down. That means what I analyze is that Reliance is in a downtrend. Are you getting me? So if I convert it into a smaller time frame, like 15 minutes time frame, I am not going to take any bullish view here. Or if I'll take a trade, I'll plan my trade in a bearish way, so that I'll plan to sell. Suppose I'll plan here, suppose I get the price here, I'll plan sell and I'll cover it over here. So I'll get the profit. I'll not go for buying because the major trend is in the downward direction. Okay, this is what I mean by higher time frame. Okay, the higher time frame provides a bigger picture perspective. Lower time frame provides a precise entry. Now, precise means exact entry, so that your stop loss is very less. Now, suppose anytime if we take a trade and it goes against us, okay, like suppose I'm taking you to the 5 minutes time frame. Now it appears like this. So to get the very good price, okay, the best entry, we go to a lower time frame. Now look, in the lower time frame, you see I'm getting better entries, if you can mark here. Okay, but like here. Now I have drawn the pattern. I can see, the when the price is at 2402, somebody might have sold here, and look how much points you would have got. Like if I draw the scale, okay, then look at here. This is more than 53 points. Means in one share, if you had sold, you would have got approximately 50 rupees profit by selling here and covering it here. Okay, and here also, just look, the price action is there, and suppose somebody has sold it here at 2373, and he will cover it right about at 2329. Okay, somewhat 40 rupees he got. So that is a point. That is what I am trying to suggest, is that in the time frame, the higher time frame gives us a better picture. Excuse me. The lower time frame provides us a precise entry. Okay, and the discretionary traders must choose the time frame properly. Okay, it depends on your personality, what time frame you want to choose. Suppose you are an investor, you just like to trade in a higher time frame, so that you won't have a lot of problem. Okay, you will just invest and sit tight. Okay. So this is it. The investors, they use the higher time frame, and they, for them, the lowest time frame is the daily time frame, and they trade in the weekly time frame. Okay, and for swing traders, it is almost same, a little bit different. What they do is that they trade in the daily time frame. Weekly time frame is longer time frame, and the higher time frame for them, and hourly is the lesser time frame. Okay. So for daily traders, day traders who trade only in the day, one day they open their position and close it. Okay, for them the daily time frame is the higher time frame, and they trade in the hourly time frame, 15-minute time frame, 5 minutes. All scalper trade in 1 minute time frame. Okay, scalper means they just take the profit, what how much they get in a very less time. They enter in a very big quantity. Okay, and there is another scale called the logarithm scale. Logarithm scale, this scale is used when a stock has covered 100%, more than 100% of its price. Now let me take you to same Reliance itself. I am taking you in a monthly chart so you can better understand what I want to tell you. Now in a monthly chart, okay, every candles denotes a month, 1 month. Now look what has happened. In the course of time, you can very well see that the price, look at this, the Reliance stock price was 19 rupees, and slowly it was in 1995 19 rupees. Then let me draw a line, it will help you to mark it better. Yeah, can you see this line? So this is 22 rupees, it was 22 rupees. Okay, and look at this line, then it went up to 44 rupees. Okay, at this point of time, it is 44 rupees. Now, what I want to make you understand is that look at the distance. Now, again, see another thing. Here, the price was 132 rupees, or I take it when it is 100 rupees. Okay, okay, 99, say 101 rupees. Now, at a higher time, it is 200 rupees here, 200 rupees. Okay, now look at this. From here, from this lower 24 rupees to 48 or 49 rupees, prices has doubled. Okay, and from 100 rupees to 200 rupees, the prices has also doubled. But can you see the difference? This is, prices has doubled here, also here. But since we are using a normal scale, is this proportionate? It doesn't look proportionate. Look, this distance is so less, this is so more. So in that case, if I convert it into logarithm scale, I click over here and look. Now look, all the distance are equal. Are you getting me? So we use the logarithm scale when the price movement is more than 100%. Okay, now if I turn it back, I switch off the log scale. Now you see the difference. The price here has also increased 100%. Here also increased 100%. But the synchronization is not there. The symmetry is not there. This misguides us. Okay, so just remember it. Hardly a very few people will tell you about this. Okay, whenever the price of a stock or a commodity, anything which you are trading, okay, goes up by 100% or more, then we use the logarithm scale. So we get a proportionate view, a more congruent view. Okay. Huh. Now coming back, I have to tell you one important thing which I marked, and you should know. Let me take you to ICICI Bank. Okay. So this is the chart of ICICI Bank, and I'm taking you to the daily chart. These are some level marks. Okay, I had marked them. I'm removing them. Just look. Now markets are closed on Saturday and Sunday, and very important holidays or national holidays, big holidays. Now the results were to come on Saturday. Okay, but look at this. Previously, the market knew that the results are coming back, and this information was somehow leaked. So that is why, on the previous working day, like on the when the market has opened, even on 17th, people knew that the result is coming not as per expectation. No, so that is why you see the market opened at this thing. The resistance of ICICI Bank is at somewhat 900, but the market opened above the resistance, but it could not sustain. It came down. Okay. Now look at this. It has come down. Then it tried to go up again. Then it has come down. Then it tried to go up again, but it is coming at a lower thing. That means some people knew. And this thing chart can tell us. Chart, and if I show you the volumes, you can clearly find. Look at the volumes. Look at the number of these are the volume candles that they come at the baseline. Look at the volume of the the A candles, red candles. Look how much they are. So that is what I wanted to tell you in the first class, that people are more informed. Okay, so to beat them or to fight with them or to get edge over them or to gain money from this market, we have to be technically strong, because the chart will tell us anything. And when the news comes, the news before that, much before that, people already know, and they take their position accordingly. So we can beat them if we read this chart as we can read the lines of our hands. We have to be that clear. Then we can, and we have to have faith in the chart. We cannot go by news, we cannot go by rumors, because those are to misguide us, to take our money, planned by big people, the DII, FIA, all these fellows. So we have to read the chart, analyze it, and take our position accordingly, so we can beat them in the long run. We have to be disciplined. Okay, we have to mark our position size correctly. We don't have to be emotional. Suppose we have taken a position, things are going against us, we have to cut our losses as quick as possible. I hope you like this video. Okay, please like and subscribe, and those who want to open the account in Zerodha, they can do so. And suppose anyone wants to open an account, free account, he or she can open it in DHAN. I have already given the link in the description. You can check that out. Thank you, friends. That's all. We'll meet again. Bye.